All right, welcome to Talkin' Investing. I am Tom, and as always, this is not financial advice. Today, I want to talk about a company called SOFI Technology, stock ticker SOFI. SOFI is a high-growth company. We talk about the small-cap, high-growth companies on this channel all the time. So if you're new to the channel, please remember to subscribe and hit the notification bell. Also, if everybody would do us a favor and smash the like button, it helps the channel out a lot. And you will see in the pinned comment below a link to our free Discord. This company actually was selected by our gold members, which get to select one video per week. I'm going to take a look at SOFI and break this down, look at what they do and what their stock is doing. This is an extremely complicated company, so let's talk about SOFI. Okay, the first thing is you'll see they closed Friday at $6.39. During the trading day, they got down to $6.32. If you look down here, you will see that that is their 52-week low. It is not only their 52-week low, it is their all-time low. SOFI's traded as high as $24.95. It's been going down and pretty much on a steady basis since November. Most of the high-growth stocks have been plummeting since November of 2021, and this is no exception. So this leaves it with a market cap of $5.11 billion. I'm just going to put that in perspective a little bit. This is a chart of their market cap essentially since they went public, which was just about 1 year ago. So you can see here, like we talked about, on November 8th, SOFI hit a peak of $18 billion as a market cap. So we see now that it's down to $5.1 billion. So this stock's market cap is down considerably. I always like to put this in perspective because sometimes the stock price doesn't actually reflect the market cap due to dilutions, but you will see this stock is down, and it is down because its market cap is eroding severely. Okay, so having said that, let's go take a look at who SOFI is and what they do. This is why this one's complicated. They have their hands in an awful lot of things, and they continue to expand that. Most recently, they got a bank charter, so that's on top of everything that they do. Now, that should facilitate and streamline for them. It should be a big benefit over the long term, I think. However, this just occurred for them, so this is a brand new part of their business. So most of the numbers we look at do not include the fact that they are now a chartered bank. They transact business through their SOFI app, and they're trying to provide consumers for an all-in-one experience. So you can see they have investing, personal loans, student loans. Now they're a bank, as we just talked about, home loans, credit cards. They have insurance products, auto loan financing, credit score and budgeting services. So they provide a wide variety of financial services. In addition to that, they have a tech company that's infrastructure based that allows transaction of a lot of these services, and that is one of their sources of revenue as well. So having said that, I want to go right to a chart that breaks down their revenue by segment, because you're going to see that even though they do all of these things, there is one segment of what they do that absolutely dominates their business. Okay, this is their segment financial statement. So they've broken it down into the three segments. One is lending, two is technology platform, and that's what I was talking about. They have some behind the scenes technology infrastructure, and they have other, in addition to the fact that they use this platform, Galileo, they have, I think, 44 other customers that use it as well. So this is a source of revenue for them. And then they have their financial services, which we just looked at now, which will include being a chartered bank. But you can see when you look at the revenue, $763 million of their $984 million of revenue comes from their loan originations. And if you break that down further, you'll see that really the main three are student loans, personal loans, and home loans. 2 years ago, student loans made up about 60% of their business. That went down to about 50% in 2020, and it's down to about 33% in 2021. So they are diversifying, they're growing other lines of their business, and they are becoming less reliant on that, which is good because later we're going to talk about something that is interrupting that line of business dramatically. You can see their technology platform, they actually just bought in 2020. So the 2019 revenue, I'm not even sure what that is. So they did double this from 96 million to 194 million through customer acquisitions and just increased usage. So this segment seems to be growing nicely. It is still small by far compared to their loans. This is a loss leading category because most of their customers at this point, I think, are being acquired through this financial service segment. And as they acquire new users, and we'll look at their user acquisition, they are then monetizing those users by having them use other more profitable services across their business segments. So you'll see the financial service itself loses a significant amount of money, $134 million loss on $58 million of revenue. Last year, they had a $132 million loss on $11.8 million of revenue. However, like I said, I do believe that this is where their customer acquisition is now being generated. So looking at customer acquisition, here's members. Record growth in new members. 523 quarter over quarter to 3.5 million. Record growth in new members, 523,000 quarter over quarter to 3.5 million overall members. That's a 87% year over year, 39% more members added than in Q3 of 2021, so same quarter last year. Here's their chart by quarter over the last couple of years. You'll see they're now up to 3,460,000 members. At the beginning of 2019, they were at about 704,000 members. So you can see this has grown 5x in the last 2 years. So they expect to continue to grow. We'll look at their growth rate later when we get to the financial statements and their projections, but they expect to continue to grow somewhere over 40% year over year for the next couple of years. So this is a very high growth company. Okay, they do have one big issue. So I'm going to get to that right now. It is a temporary issue, but it is lingering and it keeps getting worse. So SoFi updates 2022 annual guidance to reflect the latest extension of federal student loan payment moratorium. So for those of you that don't know, moratorium means students don't have to make their payments. So for SoFi, this is not a good situation because, as we discussed, although they continue to diversify, it is less impactful than it would have been 3 years ago. This is still a significant portion of their business, is the student loan business. So you'll see what they say here is SoFi's updated annual net revenue and adjusted EBITDA guidance for the full year 2022 is 1.47 billion. And remember, they were 984 million last year, so they still expect significant growth. Previous to this moratorium getting extended, they were expecting 1.57 billion in revenue and 180 million in EBITDA. This decreases their revenue by $100 million and it decreases their EBITDA by $80 million, and that is significant. That's more than a 40% reduction. SoFi maintains its original guidance of 280 to 285 million adjusted net revenue and 0 to 5 million adjusted EBITDA for the first quarter. There was already a moratorium for student loans in the first quarter, so they had that already factored in. At this point now, what they've done is they have assumed that this moratorium is going to last the rest of the year, and that is probably a safe assumption. However, it is unlikely that it's going to last forever, so at some point in the future, they will return to business as usual. This year's numbers are getting hit hard by this moratorium. They have become so diversified, and the rest of their stuff is growing fast enough that they're actually still going to have very strong year-over-year top-line growth and bottom-line growth. It's just less than it would have been had it not been for the student loan payment moratorium. So there's 10 analysts that cover this, and they're expecting 45% growth in the year 2022, and that is adjusted down to this 1.47 billion that we just looked at in that press release. And then next year, they're expecting another 42% growth. So this company is continuing to grow at a very high growth rate. They do have positive EBITDA, however, they do not have positive net income yet. So you'll see they anticipate losing about 45 cents a share. Last year, they lost about $1 a share. They anticipate cutting that in half to about 45 cents a share in 2022, and then cutting that not quite in half to about 24 cents a share in 2023. So very much trending in the right direction, all the while having positive EBITDA that is growing. Their 2022 projection is positive $100 million. So this article here says analysts are still recommending SoFi stock, but are lowering their price estimate accordingly. So remember, it's trading at $6.39 right now. Even these lower target prices still represent more than a 100% increase in the price of their stock. Bank of America has the lowest price target of them all, and it's $12, so that's not quite a 100% increase, but it's pretty close. Now let's go to the chart and see what's actually happening. Okay, so this is SoFi's chart on the 1 day time frame. So each one of these candles represents 1 day. You'll see, okay, so this is back on November 11th when their stock peaked at $24.65. Since then, they are down over 70%. They're now down $6.39. And you can see, I mean, this has just been a steady downturn since those November highs. They continue to set lower lows all the way along the way, including on Friday, which was their new all-time low. All of the year 2022, they have just been breaking their all-time low as they continue to slide down. This has gotten caught up in these high-growth companies that are getting destroyed. If you follow my channel, you'll see that I have a lot of stocks down 80 or 90% that I'm following. Some are down over 90%. So this company is a little bit bigger, but it is still down over 70%, and there is absolutely no line of support here. This is their all-time low. They continue to set new all-time lows. So from a technical standpoint, I'm worried about this stock. It is clearly a falling knife right now. If you look at their daily RSI, there's nothing encouraging happening here. They keep rotating from 30%, which is oversold, back up to about 50%, which is neutral, and they can't seem to get past this 50% point. So they continue to get back down to this 30% oversold point each time, hitting a new all-time low for the stock. So I don't see any change in this trend right now. And I don't see any reason that there will be a change in the short term. So again, this is some short-term stuff. And please remember, this is not financial advice. You guys have to make your own decisions. SoFi is an incredibly complicated company. So I would get to know this company if you're trading it, because there is a chance they're going to go much lower. Even though I will tell you, I like this company and I think their long-term success prospects are very good. The problem is, from a technical standpoint, their stock is not doing well. And the student loan moratorium is not helping. So if I try to do an assessment on book value, this company has about $4 billion in equity. However, they do have about $1.5 million of goodwill and other intangible assets. So, if I net everything out, right now they're trading at about $5.1 billion. I could see this company going down to about a $3.5 billion market cap. And I'm not saying that's reasonable or that's my price target. I'm just saying this is the trend that is happening with these high growth stocks. They're getting taken down to their net asset value, sometimes below their net asset value. So this one is all about time frame. I am not invested in SoFi. I probably will not invest in this at this time. There's just too many other things that are also equally or more oversold than this. But if you understand this business model and you like this company, I do think they have a bright future. I just think the next 3 to 6 months are going to be tough trading for them. This might be a spectacular time to start dollar cost averaging into this, but do not be surprised if it goes lower, because again, this continues its cycle of hitting lower lows, including Friday was its all-time low. So that's what I got for you on SoFi. Kind of a mixed bag. I do think this is a good company. I think they have a very bright future. You can see they have a very diverse product mix. They are gaining members. The investment community is completely risk off. So therefore, in the short term, I do worry that the stock will continue to tumble maybe another $1 or $2 before it hits its bottom. So again, not financial advice. Please do your own due diligence. Best of luck investing. Thanks so much for watching. If you made it this far, please remember to subscribe to the channel and smash the like button. And we will see you in the next video.